We have not seen that they say we will not go to Sweden due to the risk of the Swedish krona. They're hedging the risk, actually. The difference the last 2 years and before that is that actually now it's positive with Sweden economy. We saw the growth of the Swedish economy, so it's positive things to invest in this Sweden. So a former colleague of me, he told me in 2004 when we was voting for the euro or not, he asked me, how stupid are you in Sweden that say no to the eurozone? And it wasn't my decision, it was the people. And then well, you have the UK, you have the British pound. Well, it's a total different thing. But I would say that Sweden now, today, it's a really strong economy. So, and that is not scaring away investors.
I think if you look at the really long-term prospects for Europe, it looks not so good for all parts of Europe. And I don't really see what's going to drive the growth in certain countries. But I'm quite confident about some of the countries in the northern part of Europe that they will perform quite well, because we have those kind of industries that most likely will grow in the next 10 to 15, 20 years. And we have a good education system, and we have no government debt. I don't really see how Greece is going to turn around or Portugal is going to turn around. It's going to be tricky for them. So therefore, an investor acknowledges that, and therefore it is probably better to invest in northern part of Europe than in the southern part of Europe in the long-term perspective. And I also think that if you look at demographics, it's quite important if you look for real estate in the really long term. And Sweden, and especially Stockholm, has an enormous growth in population. And I think Stockholm and London are the two fastest growing cities in Europe, while Germany are going down actually in terms of population. And so goes the Southern Europe as well. And that will have an impact in the long term. So even though the core investors are paying, I would say, yields that are historically fairly low in CBD, that probably makes sense because you will see rental growth in the really long term.
Okay. Well, the message from that seems to be that it can be difficult to access the Nordic markets, but that's the place you should go to.
Yeah, I've got one very...
And I don't think you should say it's so difficult to get into. Yes, it is quite competitive compared to Spain, but there's a volume to look at. And the transaction volume in Sweden was bigger than the total volume in Italy, Spain, Portugal, and Austria together last year. So it is a very active market, and that means you can get in. And just a few years ago, the international investors were 30 to 40%, so they can get in. And doing transactions in Sweden is easier than most other countries. I think if you talk to the investors in London that has invested in Sweden, they think that has been a good example of how to do the business. Just look at the sales memo in Sweden, that is much more advanced than you will see in most parts of Europe. London being an exception because here the market is very professional. But even if you go to Germany, the sales memos are quite bad, to be frank. So I think we will see more international investors coming back. The problem is that it is the international investors that are based in UK that has the problems, because here you have a financial crisis. So it's not that much money coming out from the UK and other markets at the moment. And therefore they have competing two strong economies. But over time that will improve. So we will say, I think if we sit here 3 years from now or 4 years from now, it's going to be 30% international investors in Sweden again.
I agree about that. And the why to invest is also that if you get in and get one property or two properties and with a total volume of 100 million euros, then if you can't expand as much as you want to do, you have always the possibility to sell the property because the liquidity are there. So yes, if you can't start with a big portfolio, start with small ones.